This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices under a little pressure this morning, even though we did have the consumer confidence report coming in quite a bit better than anticipated. So futures appear to be underperforming the news. Some of this may be long liquidation with the Fed meeting today and tomorrow. Most likely the Fed will maintain their current policy of buying $85 billion every month of treasuries and mortgage-backed securities in an effort to stimulate the U.S. economy. It does appear, though, that in spite of all of this quantitative easing, all of this addition of reserves to the banking system, we are starting to see less and less growth in the U.S. economy. I think ultimately there's a possibility that the economy will slow to the point where the Fed may be questioning the impact of all of this accommodation. And I think that could be viewed as somewhat of a negative factor, but that might take place later this year, possibly later rather than sooner. Over in the currency markets, seeing the euro currency holding up relatively well, even though we did have some negative economic news in the form of slower inflation and unemployment levels increasing to a record high, at least a record high since numbers were first kept in 1995. We feel that we are most likely to benefit from the situation where a slowing global economy will hurt the commodity currencies, the Australian dollar and the Canadian. So I think our focus of attention should be on the short side of these two currencies. If we're right in thinking that the global economy is weakening, the commodities that Australia and Canada export are likely to slow, and of course that would be a negative for these two currencies. So from here, look for lower in the Australian dollar and the Canadian. Also feeling that interest rate differentials will continue to undermine the Japanese yen. Even though the yen has held the 100 yen to the dollar level, I think this is only a temporary situation, and in the next couple of weeks look for this support not to hold, and the yen is likely to work lower against the US dollar. In the credit markets, we are not that far from new highs for the move. We believe that the slowing global economy will continue to take the credit futures market higher, and this is a trend that is likely to last probably through the balance of this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.